Alright guys, so the US and China, they're about to hold talks on June the 9th, which is tomorrow. Now the location is very curious, right? It's going to be in London and doesn't really seem like neutral ground to me. Now there are many other locations I can think of. Why not Saudi Arabia or Dubai? But whatever the case, this event is extremely major. It's a big premonition into how US-China relations will be in the next few years. Now, we can expect China to bring their A game to London. It'll be a fierce team led by their sharpest economic minds. Now, chances are He Feng, the same person in Switzerland, will be there as well. Now, on the US side, the delegation will be led by the Dream Team, our good friends Scott Besson, Howard Lutnick, and Greer. So, Americans are going to throw their biggest bowl of spaghetti on the wall and hope that something sticks. Now, it's critical to remember the detente that currently exists. Right now, there's still trade going on between the US and China. The main beef with the Americans have with the Chinese are the rare earths, and that's why Trump did a mini taco and requested a call with Xi Jinping. But the situation can always devolve once again into utter chaos. China is not frightened. The American rate on Chinese imports is 30%. China's rate for US imports is 10%. It looks like the Americans are winning here. Chinese exports are facing triple the punishments. But recall the big difference. Chinese supply chains are very well diversified. Even if they sell at a 10 or 20% discount to global customers, they can still move products globally without any trouble at all. And that's why Chinese exports globally didn't collapse. In April, when US tariffs were 145%, China basically sold more stuff around the world. The majority of flows went to Europe and Southeast Asia. Trump's global trade war backfired. He put enormous pressure on the world. Revenue globally could collapse, so countries themselves needed to buy cheaper goods and inputs to survive. They had to buy affordable Chinese exports. But the US situation is vastly different. Inflation across the board is in trouble. There's big speculation that inflation is about to rebound in May, and this is going to shape the negotiation in London. Now, economists are expecting core inflation to rise by 0.3% in May, the biggest move in 4 months. It could get even worse, which would signal a major point of weakness in the US economy. Now, core inflation is a metric closely watched by the Federal Reserve. Should core inflation remain sticky or even rebound, the odds of a rate cut becomes even slimmer. But the economy desperate needs a cut because there are many segments already buckling under higher rates. Now the US is coming into the trade negotiations with both an inflation and an interest rate problem. China has none of those problems. That's the big difference here. Besson believes he's coming in with a full house to the poker table, but it's probably a pair of threes, and everyone knows that, including Beijing. It's why China will take a hard line position with the US. They don't really need to give in to anything, but Besson needs serious wins to save the US economy. Now, consumers are really starting to break down. This is the likelihood of people in the US coming out with $2,000 in the event of emergency, and only 62.7% can do that today. It's the worst level since data was even collected. Compared to 2015, consumers are 35% worse off today than yesterday. Not good for an economy that's 70% based on private consumption. Now, China knows this. Every single trading partner of the US also understands this. And that's why the wait and see approach is just so popular. Let's see who cracks first. That's the game going on right now. Now, if we listen to Lutnick, it's immediately apparent that tariffs are out of control. The US is punishing almost every export on planet Earth to reduce the deficit. But that also includes stuff that they don't make. It's simply bananas.
What's the tariff on bananas?
The tariff on bananas would be representative of the countries that produce them.
And what's that tariff?
Generally 10%.
Correct, 10%. Walmart has already increased the cost of bananas by 8%.
But as countries do deals with us, that will go to zero.
Mr. Secretary, I believe you know better. I believe you recognize that a trade deficit is not something to fear. I believe you know that predictability, stability is essential for businesses.
There's no uncertainty if you build in America and you produce your product in America, there will be no tariff.
We can't
So the
produce bananas
concept
in
of building
America.
in America and paying no tariff
We cannot-
is very, very clear.
We cannot
Fighting for
build
imports is
bananas in
not the same.
America.
Now, this is the circus show that's going on. Lutnick wants the US to self-manufacture bananas. Now, how is he going to do that? Fly in the components of a banana into a US factory is impossible because the environment itself in the US, the soil, is not exactly ideal to grow bananas. And that's why they have to be imported from overseas. So overall cost pressures in the US are flying higher. But when it comes to China, there's also a qualitative aspect we must consider. It's a big reason why Beijing is going to play hardball with Trump. Now, China's exports more high-tech goods to the US, and this includes smartphones, semiconductors, and other electronics. And that's why Lutnick caved with his exemptions on these goods in the first place. Now, a lot of Chinese machinery is used in the US, especially in farming and construction. Should those stop, prices of the products would most definitely rise. Now, Trump's economy, however, ships only low-tech goods to China, and this includes fuel and agricultural products, stuff like soybeans and corn. But here's the issue: China can easily replace them using suppliers in BRICS and Brazil. Which brings us to one dire conclusion: China can replace its imports from Trump's economy very easily. The US simply can't because China is the world's factory, like it or not. We have to underline this fact: the US is trying to flip economic reality upside down. Besser, Lutnick, and Trump, they're all trying to rewrite trade and financial rules all at once. They're trying to redo the matrix. However, they are proceeding too fast. Trying to compete with China is a multi-decade endeavor, and you might not even win, you might not succeed because Beijing is not going to give up the advantage, not willingly. The supply chains are just too diversified, not just in the export game but for Beijing's own import needs as well. And let's hammer in this fact a little deeper. April is the second month in a row China has refused to buy any supply of US crude oil. We can expect the same situation in May and probably in June as well. Now, this is horrific for US producers and the big oil majors. The Chinese energy market is the biggest in the world. They are huge importers, and this amount will only continue to grow. But thanks to the tariff war, Chinese industries, they are sourcing elsewhere. They are buying from Saudi Arabia and they are buying from Russia. Beijing isn't afraid to buy cheap Iranian oil as well. As a result of this, US oil production, their exports in April, are down by 4% versus March. And let's not forget OPEC and Saudi Arabia. They are about to flood the global economy with a deluge of oil. What does this do? It's going to drive US oil prices down even further. Now, China is one big factory built on energy economics, so the lower prices go for them, the better it is for the entire economy. They are also developing a ton of solar and nuclear power. It will be US oil producers that get hammered. Their cost of production is simply too high. US alternative energy is also way behind China. As we said before, the US is trying to juggle too many things all at once. Lanik is at it again, trying to explain the deal, which is basically the US playbook for the next 3.5 years.
We had a bad deal in America that produced a $1.2 trillion trade deficit. The deal for America will be opening access to markets that have been closed for hundreds of billions of dollars, and then charging and protecting industries which have been attacked by foreigners like steel and aluminum, where the foreign governments give free or very cheap energy, and they make it unfair. So we're just going to get to a better deal for America, and it won't take that long, but it's a better deal for America.
So once again, the trade deficit is the problem. He wants to force countries to buy more US products and increase US revenue, at the same time protecting US domestic industries. Why? Because countries subsidize their own industries by providing cheap energy. Now that's what it said, which is quite rich because the US also subsidizes their own companies. The only difference is that other countries play the subsidy game much better than Lutnick or his predecessor Raimondo. Now, we have reports that Beijing has thrown the US a bone. Now, China might have issued rare earth export licenses to major suppliers of US automakers. But note that this is a temporary reprieve if it really even happened. We can expect things to collapse if trade talks in London fall apart. China is trying to play nice, but they need to see concrete actions from the American side as well. It's really crazy to expect Beijing to give Trump leverage to contain China's economy without asking for anything in return. Beijing also expects Trump to roll back the chip sanctions, but will the US really do that? Or will they weaponize critical exports against China? Now, the US still holds some cards against China. Chips are one of them, but another is the export of ethane. Now, this is a critical input for making plastics. The US is rich in shale gas, so they can export ethane cheaper than any country out there. In the first 4 months of the year, they sold over 1.8 million tons to China. The Commerce Department is really moving to withhold permits for ethane cargoes heading to Beijing, so cancellations might be on the way here. But let's get serious. This is a very poor card to play with China. It won't work because Beijing, they are also climbing up the value chain. They are moving away from plastic production to technology and chips. It will only enrich Beijing and make them even more furious. Things won't end well if the US decides to escalate on this front. But another front is financial markets because confidence is a very fragile thing. Now, should that domino fall, all sorts of chaos could erupt throughout the US economy. And according to Goldman Sachs, foreign investors are already running away. In May, foreign money withdrew at least $37 billion out of US stocks, and this is the most in at least 12 months. And why wouldn't they? There are just so many negatives piling onto US assets today. Growth is getting curtailed and additional stimulus is going to get less effective. And let's not forget the dollar is still down by 8 to 10% today. Foreign stockholders are still deep in the red. Other markets like China, they are up by 15 to 18%. So there's a very big difference here. It's night and day. But the big beautiful bill also contains a Trojan horse. Now we talked about it before. It allows the administration to punish foreign holders with a revenge tax. So the value of your gains, if any, could get taxed to oblivion. Now, I could go on and on. I could talk about sanctions, I could talk about the eventual bond default, but you kind of get the idea here. Global investors are losing trust. We are witnessing a run on US confidence. And we must beware the domino effects. Should the US China talks collapse, we might see even more money leave US assets. Now, the risk is enormous to the bond market when yields are still seriously elevated. And Besson doesn't want borrowing costs to head up. He wants it to head down. And let's recall his promise to the world.
Is that we are setting the fundamentals for a strong dollar, a strong economy, strong stock market, and for investors to know that the U.S. government bond market is the safest and soundest in the world.
Besson is trying to go ahead of the curve, but this only works if the US and China really works out a trade deal. And it has to be a really, really good one. Not some half-baked plan that looks good on paper but still hammers China behind their back. Beijing is not playing around anymore. They are not playing that game. Jamie Dimon has mentioned how China isn't afraid of the US, and this should be constantly played in the minds of Besson, Lutnick, and Greer. The US trade war only plays into the hands of the Chinese. US tariffs make it harder for countries to export to the US. Over time, this will shift exports away. Countries will make less while Trump's economy faces shortages and his consumers will pay more. Meanwhile, US trading partners will buy more from Beijing. They will have to lower their input costs and make life affordable for their own people, right? And that's why this trade war is just silly. US consumers suffer, Chinese exporters start to profit more. And how is this a win for Washington? I fail to see it. It's without doubt that the current plan is just not working. Playing the short game never wins long term. Besson and friends think they are playing poker with the Chinese, but he's just playing roulette with himself, and the odds of a victory are stacked against the US. But let me know what you think. Will Besson get a good deal, or will the trade talks collapse again? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.